Good morning, everybody, and welcome to MarketStream.live. It is August 4th. Wow, cannot believe I'm saying that already. And we are taking a look at everything that is hot here in the markets. My name is Joseph Cusick with the Cusick Group Securities offered by MoneyBlock. And I want to thank you for joining me. And as a matter of fact, I wanted to mention something. The MarketStream team on their Facebook page is now posting intraday updates, stuff that's going on, things that they find interesting. And I wanted to point that out for the team, for you, so that you can go and utilize this information. So, for example, team came out this morning and started talking about stocks that were gapping up and down based on earnings or merger and acquisition activity. There's also some larger commentary from the team as well. So you want to take a look at that anytime you have an opportunity. But let's jump in and take a look at the markets. Now, I'm going to just surmise everything that we saw overnight, and I'm going to look at it from a weekly basis, just to give you an idea of what's been going on in the world. And really what you're seeing is you're seeing a currency shift. The U.S. dollar, this green line here, has been dropping precipitously, basically for the last month, but all of 2017. That weakness is now turned a corner. Now, before the overnight hour action had closed, the dollar hadn't moved, but the Nikkei finished down because there was still some yen strength. Yen is weakened compared to the dollar this morning. We'll have to see if that's going to start impacting the Asian markets, because they were moving to the downside pretty briskly as we got into the tail end of the week. They finished basically flat for the week, above their 20-day moving average. So we'll watch that very closely. But as I said, the U.S. dollar weakness or strength and yen weakness is going to be a potential catalyst, especially for export stocks in Japan. Taking a look at Shanghai, similar action, except Shanghai has been moving very briskly to the upside so far. You saw that it finished higher this week, and what's notable is that despite the fact that there is a lot of discussion here in the United States about intellectual property issues in China, as well as potential trade imbalances that needed to be righted. That's what the Trump administration is putting out there, specifically the president. They're going to be reviewing all of this, and the markets in Shanghai held up this week. As a matter of fact, we saw the People Bank of China do quite a few things that are trying to add confidence to the system. One is that they're clamping down on leverage. They're also clamping down on banking institutions that have really large balance sheets, and they continue to infuse capital into the system. This week, they've infused more capital than they have in the previous 3 weeks combined. So they're really trying to boost the markets. Taking a look at Hong Kong, did finish to the upside. So the activities that's occurring in the mainland has Hong Kong moving to the upside. We'll see if that continues next week. Taking a look at India, India bounced back quite well in the overnight session, finished the week flat, but they recovered after some pretty decent downside, so we'll keep an eye on that. You're also seeing now in the European markets, taking a look at the debt markets, the Treasury, the 10-year in Germany, France, and Great Britain, all down between 0.3% and 0.25% respectively. This is added to a catalyst. You're seeing the German markets, the DAX, screaming to the upside. There was a battle here that was being fought over the last couple sessions. Looked like the bears were going to start to gain some control. On a weekly basis, they're challenging that 20-day moving average. So the short-term bulls, they're basically moving to the upside. On a daily chart, you see that with this dollar strength, euro weakness, this is helping exporters, financials, basically run the gamut. Consumer names, they're moving to the upside. Not only in Germany, you're seeing similar action in France, as a matter of fact, with a lot more velocity, breaking back above their 20 and 50-day moving average after being in a pretty bearish trend for the last few sessions. Where it's been a little bit more neutral is in the UK, but the bulls have taken control over the last 2 sessions. I think you're going to watch the pound sterling, though. It's been lagging the move in the euro, but again, it's still well above where the U.S. dollar is. Any weakness in the pound sterling is going to, again, help Also, watch the energy markets and the mining markets. Any weakness that will start or continue in the commodity areas is going to put pressure. There's also some headlines that are coming out of Australia. Overnight, Australia basically looked at their growth trajectory, actually sliced it down a little bit, especially since the Aussie dollar has been so strong. That's put pressure on the commodity markets. That's going to put pressure on growth there. Let's see if that concern actually comes to fruition. Taking a look at the U.S. markets, the bond markets are pulling off, down almost 0.9% on the 30-year and down 0.35% on the 10-year. This is going to be positive for the equity markets. It's going to cycle capital potentially into those markets. Where we are also seeing weakness is in the commodity markets. You're seeing copper down 0.25%. You're seeing gold down almost 1%. And you're also seeing the oil markets under pressure. Brent under pressure, as well as West Texas under pressure. Now, I'm not going to say it's serious pressure, but with this dollar strength and this upturn here, that's going to start putting pressure on these commodity markets. We also saw it in the softs. So the corn, the soybeans, the wheats, all under pressure before we saw this dollar turn, and it seems to be turning quite dramatically right now. Taking a look at the equity markets here in the States, moving to the upside, still showing some strength. The Russell 2000, taking a look at the right there, up about 0.4%, trying to get above that 20 and 50-day moving average. This has been the worst performing index, this small cap domestically centric index that looks at small businesses and banks. The pop right here, really, you can give the catalyst right now to the banks, as well as the fact that there was a non-farm payroll that came out over 200,000. That beat expectations, and there was a revision up from the previous non-farm payroll number. You're seeing that the NASDAQ is holding in strong, right above that 20-day moving average. There's been challenges of that over the last couple of sessions. We're going to watch that very closely. On the NASDAQ, we're going to be watching 58.66. That's going to be a level of support that you're going to want to watch. And then on the S&P 500, bottom line is that you're going to need to see strength in areas like financials. If finance can start really garnering some strength, that's going to at least hold up, if not start to catalyze the S&P 500. Right now up a little less than 0.2%, 0.19%. But watch the area that we're going to be focused on as far as next test is going to be 2464 on the SPX. The Dow Jones. This has been the strongest index of them all, the Dow 30. The blue chips have been having off-the-charts earnings, and we're now getting through, and we'll be wrapping up almost the heart of the earnings cycle. And the earnings cycle has been awfully impressive so far. It has catalyzed the Dow Jones to new all-time highs. As I think yesterday we had the seventh consecutive session in a row where we had new highs. Well, it looks like it's going to potentially have number 8 on this Friday. Dow's up 31 points right now. We'll watch this very closely. And then finally talking about the fear index, VIX, non-existent. As a matter of fact, you're seeing with the dollar strength and the markets holding in with positive earnings, bottom line is there is no fear in these markets. There hasn't been. The complacency, we could talk about it until we're blue in the face, but the bottom line is that there is no expectation of big violent moves going into the upcoming sessions. Does that mean that it cannot move? No. So that's what I want to discuss with all of you right now, which is be very careful about being complacent. Sit down with your advisor and look at the performance of your portfolio and what they project as the potential returns and the risks, with a 95% probability of the portfolio that they have positioned for you. If they cannot address that for you, come to me, Jay Cusick at moneyblock.com, jcusick@moneyblock.com. I'll give you a complete analysis with a 95% probability of your downside risk and your upside risk. I think this would be very helpful for all of you, especially as we get into what has traditionally been 2 very potentially volatile months in August and September. And after what has been an unbelievably impressive earnings season, markets kind of banging their heads on all-time highs, we'll have to wait and see. All right, folks, we will be back online talking about those very strategies this afternoon to help you manage your portfolio. So we'll see you then. Take care and have a great day.